Hey everyone, this episode is brought to you by River, the place that I personally go to securely invest in Bitcoin with confidence and with zero fees. And now, with Bitcoin interest on cash, you can even earn daily Bitcoin interest on your cash balance.
If he's the issuer of the USDT token that's backed by US Treasuries, he can kind of control those tokens, even if they're running on the Lightning Network, right? Because he's the issuer. And that's an important point. And think about this. So why is Bitcoin different than Tether? Why is Bitcoin different than Solana? Why is it different than Ethereum? It's different because nobody can take this Bitcoin from you. All right, Luke, let's talk about this Taproot Asset Protocol situation that was announced in El Salvador yesterday with Tether and Lightning Labs. We were texting and we were trying to figure out like what in the world this means. And I said, dude, let's just record something and, have a candid conversation between the two of us. So fire away your questions. I'm going to do the best I can to answer these. I'm definitely not like the resident expert, but I'll try my best.
No. You're going to seem like Einstein compared to me. So some of these questions, they're going to be like 5-year-olds. So there's a lot of, I think, people out there that feel that way about sort of the apps within, the use case, right? One of the most frequent things I hear on Bitcoin is, oh, what's it used for? There's no use case, no use. And quietly, as you know, and as I know, there's a lot of use cases. And so last night there was this announcement. And so why don't we start by just having you, in your phrase, in your words, what was that announcement and what was the significance of that announcement?
So first and foremost, Bitcoin is store of value technology. I think everybody understands that it's, the first and most primary use case is to preserve buying power and protect against government printing of fiat. But through the years, there's been a lot of innovation that's been done on the code base to allow it to become payment rails as well. And so 2017, you had a SegWit update to the Bitcoin core code that then enabled scaling on the Lightning Network. Think of just like how the internet works. You got internet protocol, and then on top of that, you have the transmission control protocol, which then basically allows you to send the digital packets over the internet very quickly. I could get into more details on that, but what I would rather do is just say, similar to internet protocol and then transmission control protocol being built on top of it, you now have Bitcoin as like store of value money layer one, and then layer two on top of it, similar to transmission control protocol, TCP on top of IP. You have the Lightning Network. And what it's doing is it's basically breaking Bitcoin into these like smaller pieces that allow them to be sent very quickly all over the internet, just like TCP does for just basic data. So that update happened in 2017. So Lightning Network has grown significantly since then. Right now you have, I looked this stat up before we started the chat. BitNodes reports that there's 21,592 full nodes running on the network. And then what happens is these full nodes that are all over the world, anybody can run them. You can run a node for, it's basically free on the electrical cost because it doesn't require a lot of power at all to run a node. And like I run a node, it's very simple and easy to do for the most part. The hardware will cost you anywhere from like $300 to run like a Raspberry Pi, and you can run the whole code base for like $300 to $400 one-time cost. And then there's no like additional like electrical cost to run a full node. So these full nodes, which there's 21,000 at least, there's a lot that aren't being accounted for. So I'd suggest that the number is higher than that, all distributed all over the world. And what they're doing is they're setting up channels between each other. So like I have a channel open to somebody else, and then that person has a channel open to another node. And what it's done is it's create this payments network on layer two that allow for me to send, like you could pull out your smartphone if you have a Nostr account, right? I think you do. Yeah. Like I could zap you, $1 worth of Bitcoin over this network, and it would be that Lightning Network, that layer two network that's conducting the settlement of that Bitcoin to come to you instantly at the snap of a finger. Okay. So
I think that's important to stop and just highlight and then pull on that thread for a second for the uninitiated. Because if I understand it correctly, what you just said there is actual physical Bitcoin is moving to move that packet of value from one node to another around the world. And I want to just pause there for a second, because this highlights something very fundamentally important that I've noticed amongst we'll call them Bitcoin skeptics around the use cases, and how it is different than gold, which is to say, gold's price historically has been controlled in part because it's all centralized in a vault. And so when a payment occurs on a ledger relative to gold, basically it gets put on a cart and it gets wheeled across to the other side of the vault, and a ledger is made. But it allows for
paper.
It's all paper. It allows for a great deal of the expansion of unallocated paper derivatives. In contrast, what you just described, as I understand it, is basically the payment rails requires the movement of some small amount of physical Bitcoin from one node to the other. And furthermore, so that makes it difficult to centralize Bitcoin and run sort of the capping of Bitcoin price that a lot of people have discussed with gold, rightfully so.
So, Luke, before you go any,
I'm sorry, go ahead.
Before you go any further, there are similarities, but very large differences when you start talking about like the record of the Bitcoin happening on layer 2 to what you were describing with gold. So like you're saying, the gold moves from one side of the vault to the other, and it's a paper entry that now Switzerland doesn't own it. The United States now owns it, and it sits over on this side of the vault. Lightning works kind of similarly to that, where like, let's say you and I have a Lightning channel open to each other. I send you 100 sats or 10 cents. Okay. So I send you that 10 cents on this network. And all it is there's this gossip network on the whole network that is constantly saying, hey, the update is the channel that Preston opened, the original channel on layer 1 Bitcoin. And that's important. On layer 1 Bitcoin that Preston opened to Luke was for $100. We're going to make a paper entry that instead of it being $100 on Preston's side and $0 on Luke's side, now it's $99.90 on Preston's side and 10 cents on Luke's side. Okay. That hasn't been officially updated into layer 1. It's almost like a paper entry between you and I on layer 2 that we could just keep zapping these paper entries back and forth to each other and keeping an update on the ledger. But here's the difference. When you want to make that final, you can unilaterally go back to layer 1 and say, I want to settle this channel right now, and I want my 10 cents, and I want Preston to have his $99.90. You can make that decision. And also, I can make that decision at any point. And that the gossip
goes
network,
from off of there into the banking system.
It goes into
stable coins?
No. We're not even talking stable coins or any of that yet. We're all still just Bitcoin.
Okay.
Basically what happens is when either one of us make that unilateral decision to make it final, we go to layer 1 Bitcoin where the mining is happening. And like, just like I was describing the internet protocol and TCP, Lightning will go to layer 1 Bitcoin, raw Bitcoin, and like make that all final, and nobody can undo that transaction. And we write that into layer 1. But we could keep that channel between you and I open for 10 years. And we could be transacting that $100 back and forth to each other as much as we want. And here's the other thing is let's say I'm connected to Sam and you're connected to Sally, and Sam wants to send a transaction to Sally, but they're not connected. Okay. But they're both connected to us, and you and I are connected. So now you get the routing of that 10 cents from Sam to Sally that actually came through us. Right. And so I have 10 cents less. It routed through you, but then you don't have that 10 cents because it went to Sally, right? So you can see how the sats just kind of pinged off of us. I have the same balance. I still have the $100. You still have $0 in that scenario, but we just routed payments to two people that aren't even connected. So that's how it's so identical to transmission control protocol, where it's breaking down data packets and making them more digestible so you can send them. There's so many similarities there with what Lightning's doing. If they want to like research or study that more, I would tell them to kind of look at that and then look at how Lightning channels work. And again, we're not even to the big news event, which is Well, we still need to talk about.
Right. Let me build one more on top of that, because I think it's set, if I understand it properly, it sets us up for that big news event and its implications for a discussion. But that is that implied here, since we're talking about since 2017 and the rapid growth in the Lightning Network, what you're creating is how fast has Lightning Network grown? It doesn't have to be exactly, you and I both know it's a huge number. I don't know off the top of my head. You know better than me, I'm sure. What's that growth? And then B, does that imply essentially that you're creating, given finite number of Bitcoin at the base layer, as you're using this more and more as payment rails, you are essentially creating what is a short squeeze that cannot be papered over, unlike gold, where there's more and more. Ultimately, whenever those packets are settled, is that the right way to think about it? And then what is the growth in the network, in Lightning Network, Ben? And what's the prospective growth? And then we can sort of talk about this news.
I'm smirking because I think I know what you're getting at, which is if I take $100 worth of Bitcoin and I load it into a channel that I'm sharing with you, and that channel's being used to zap Satoshis back and forth between us. And let's say we keep the channel open for 5 years, right? On this layer 2. Those coins are never going back on an exchange to be sold into the market or exchanged for dollars, right? So as the Lightning Network is being used, it has more and more utility. It's creating a short squeeze in dollar terms on layer 1 for Bitcoin that's being sold into an exchange, because that Bitcoin's not there anymore.
It has to be there. It is the fundamental building block to allow these rails to exist.
Yes.
Okay. And is there a ratio of, so number one, 2 follow-up questions. Is there any ratio established between amount of Bitcoin needed relative to amount of transactions that has been established? And then what has been the growth in transactions on Lightning Network over the last 7-8 years since 2017?
So what you'll find is, like, let's say you were Apple and I am nobody, Preston Pysh, running my own node, and I've connected to all these other people, right? And Apple starts doing a bunch of sales in Bitcoin, which would be, and I'm using Apple as an example because they're a retailer that sells a whole lot of stuff, right? So let's say I open up a 1 Bitcoin channel, a whole Bitcoin, $100,000 worth of capacity to you. And capacity is kind of an interesting way to look at this, because it's almost like an electrical network, right? As far as the capacitance, the size of the cable that's running between you and me. So I open a $100,000 channel to you. That $100,000 is sitting on my side of the channel. Yours is at 0, right? But I'm connected to all these other people on the network, and all these other people are buying things from Apple. Okay. So what's happening is all of these transactions are flowing through me to you, and that channel, that all of those coins that are sitting on my side of the channel immediately go to your side of the channel, and it's completely used up. And there's not much more flowing from you through me back out to the rest of the world, because you're kind of a bit of a black hole with respect to everybody wants to pay you for your physical things that you're selling. Okay. So I don't have much of an incentive to open a channel to you. Sure, I'll get all those routing fees one time as they go through you. But what I would really like to have when I open a Lightning channel is kind of a 2-way mechanism where sats are flowing through me, and then they're coming to, from me to you, and then they're coming from you back through me out to the network, because that back and forth, almost like alternating currency or alternating current, is actually very lucrative for me, because I'm getting routing fees as it's going back and forth between the two of us. But if it's a one-way street, because you're Apple and you're like just selling a ton of stuff, like my channel gets depleted really fast. It goes to 0 on my side. It goes to a whole Bitcoin on your side. And I'm sitting there and I'm saying, I should probably just close this channel and basically unilaterally settle this, go back to layer 1 and open another channel to somebody else that's not going to deplete my side of the channel as quickly, because I can make more routing fees that way. So there's a lot going on in like that conversation, but what it gets down to is the most optimal partner that you can have on the network is somebody that's
somewhat balanced with the amount of Bitcoin that's going to flow between you and them, because I'm going to get the most routing fees for something like that. I don't know if that answers. I think my screen has been.
Your screen froze. That's okay. I can still hear you. So you're good. Can you give some real world examples of what more of that bilateral type of interaction transactions would be relative to what you just laid out? Some real world examples, right? Okay. So it's not you buying a bunch of stuff from Apple all the time through me. It's you wanting to have a back and forth netting on those rails. What is that? Is that as simple as, a retailer who is both taking in Visa cards right now, Visa transactions from customers now, and paying suppliers on the other side? Or does it have to be back and forth with the same people? How does that?
I would just say that today the network is pretty robust from just how many nodes you, like I said before, you have 21,000 nodes on the network that are doing this. So finding a path between you and another node on the network is there's some type of connection that can be found to route that payment because of how many nodes are on the network. I was talking more, if you were going to run a node and try to do it in a way that you're collecting a lot of fees, you want to try to have balanced partners, or else, like if you have a black hole payment, like one of the nodes on the network is just sucking. I'll give you an example. There's a wallet of Satoshi, super liquid node that you can connect to. But if you do, it's just going to deplete your channel really fast. So you're going to want to go back to layer one to close out the channel.
When you say deplete your channel, it means the Bitcoin you're putting up as essentially collateral is going to zero because you're running deficits against that channel.
But you're also, against that node, but then all the people that are paying through you would still have one Bitcoin on your node, right? Let's say I only had one Bitcoin on my node. I open a channel with you deplete the Bitcoin out of that channel, but I'm receiving a full Bitcoin from all these other people that are routing through me. So I still have my one Bitcoin. I actually have a little bit more than one Bitcoin because I have the fees for routing all of it. So I go back to layer one, I close out the channel, and I got 1.0001 Bitcoin, right? Instead of just one Bitcoin, because I routed all of that Bitcoin to you. So I get paid to do that.
If that was your fee, you were getting paid.
That was a fee
in Bitcoin.
That's right. Now, some people aren't even running fees because it's, some people are just doing it because they want to make the network stronger. So they're not even charging a fee. And so then the routing is going through these paths where nobody's even charging a fee today, right? And 10 years from now, it might be very different. But today it's getting routed through nodes that aren't even charging a fee. And so the Bitcoin, as I close that out on layer one, I'm paying a fee to close it out on layer one, and which is, very de minimis. I would tell you right now, it's practically nothing. It might be 20 cents to close it out on layer one. And so that full Bitcoin is still there, but that channel between you and me, I close it out because it's just been inundated because you're such a popular vendor on the network.
But we don't know the ratio per se, but there is it's fair to say there's a positive correlation between the growth in volume on the Lightning Network and the amount of Bitcoin, we'll call collateral, that you've got to put up in order to facilitate the volume on that network. Yes?
Yeah. Yes. Okay. Correct. And I don't know how many Bitcoin, let me see something real fast. I'll just search this.
Yeah.
Okay. We'll see what AI tells us here on how many Bitcoin have been loaded into the Lightning Network. I don't know how accurate this answer is going to be, but it'll kind of give you a sense for what it is. Now, this is where this new news is really, there's a lot going on here. Okay. So yesterday down in El Salvador, you had Tether, Paulo from Tether made the announcement. And just for context, Tether was more profitable than BlackRock in the last year, with the amount of money they're making off the coupons of all the treasuries that they're sitting on for all of the dollar tokens that they have issued against those treasuries. Just to put things we're talking, I don't know. It's billions and billions of dollars. Okay. So this guy who's running this company that's basically tokenizing US treasuries, short duration treasuries. He only buys the short duration stuff because the yields are better than the long duration stuff, and he doesn't have the inflation risk, right? Okay, so here's what it's saying. Today, there's approximately 5,100 Bitcoin loaded into these channels over the Lightning Network. because it settles so quickly, it's not like you have to have 100, 200, 400,000 Bitcoin loaded in this, because it's both ways, right? Like these channels are operating both ways. And like when you get into the capacitance of what's needed as far as Bitcoin in these channels, and just for, if a person wanted to research this more, they could go to river.com, and they have a full, really quality article about like how much capacitance do we think is even needed in the Lightning Network because of the way payments are routed and blah, blah, blah. But going back to, sorry, I interrupted my previous point. So Tether makes this announcement that they're going to start routing their US dollar stablecoin, USDT, over the Lightning Network. And they're going to use a thing called Taproot Asset Protocol. This protocol is a decentralized protocol. Anybody can run it. It takes consensus to agree with the protocol, but they developed this open source protocol that allows an individual to issue tokens, USDT in this case, on the Lightning Network and route the tokens just like we're routing Bitcoin. Here's why this is exciting, is because the speed at which you can do this is near instantaneous. The fees to do this are practically nothing. And the reliability and the decentralized nature of this network, in my opinion, is the most decentralized, network that exists, like truly decentralized. And the reason I would say that it's decentralized is because, going back to the first point that I said, it costs $300 to buy a Raspberry Pi and participate in this network. And the electrical cost is basically like a goose egg. It's like nothing. It's de minimis.
One of the most common questions I get from family and friends is, Preston, where do you personally buy your Bitcoin from? And the answer is really simple. I buy it on river.com. Not only can you buy Bitcoin with zero fees on recurring buys, but you can earn Bitcoin interest daily on cash balances while waiting for good buying opportunities. And over the past 2 years, these returns have been twice that of most high-yield savings accounts and 16 times the national average, making it a powerful way to grow your holdings. You also have peace of mind knowing Bitcoin on River is held in multi-sig, cold storage, fully licensed and regulated in the United States. Plus, their relationship managers are US-based and available by phone for you or your business. Additionally, River has built its own infrastructure from the ground up, meaning it doesn't rely on third parties to function, like a lot of other Bitcoin exchanges. River is setting a new standard in Bitcoin investing. Go to river.com/fundamentals to get up to $100 free when you sign up and buy Bitcoin. That's river.com/fundamentals.
Holding Bitcoin is the best way to protect your family from the threat of fiat currency collapse. And few people understand this better than Tony Yazbek, cybersecurity expert and founder of the Bitcoin Way. Tony was in Lebanon when the currency imploded. He's seen the chaos that erupts when the ATMs stop working and the bank accounts get frozen. He knows what it's like to lose everything. But with his cybersecurity expertise and by fully adopting Bitcoin, Tony was able to engineer his escape. And now Tony and the Bitcoin Way team work to make sure this never happens to you. With over 25 years of experience, their expert training empowers you to self-custody your family's Bitcoin the right way, secure your devices and protect your privacy, develop robust inheritance plans, and secure for Plan B citizenship. The Bitcoin Way can transform you into a sovereign individual. You just need to take the first step. Schedule a free consultation today at thebitcoinway.com/TIP.
So, for example, competitors that this is currently being routed on, call it Solana or Ethereum. For you to conduct an Ethereum transaction of USDT today, you're going to pay 50 cents to $1 and maybe even more to transact. So that means if I wanted to send you $1, or better yet, 10 cents in US dollar stablecoins, USDT, that 10 cents would cost me 50 cents to send it to you on Ethereum or more, maybe $1, maybe $2 to send the 10 cents. So you can quickly see the incentives are very bad relative to this new way of doing it over the Bitcoin Lightning Network. Right. Solana, which would also be another competitor, the fees are very low. But I would argue that running a Solana full node costs, you ready for this number? anywhere from like $3,000 to $5,000 per month to run the node. So do you think that that's actually decentralized, or do you think that Solana itself is running all the nodes? Like, everybody's got their own opinion, but I'm sorry, I don't know too many people that are going to go spend $3,000 to $5,000 to run a node just to route payments. Not to mention, I think they have to have 10 Solanas in order to have voting rights and all these other, like, that network, in my humble opinion, is completely centralized.
Yeah, we just saw that, right? With DeepSeek versus OpenAI, right? You're seeing the open source is
killing. Yes. Killing. So if it's not actually open source, if it's actually not decentralized because willing participants want to run a node on the network, is it actually decentralized and outside of government control? And I would say absolutely not. So why would Tether want to do this? Well, I think Tether would want to do this because they don't want that. And I'll argue with myself here in a second, right? I think they want to make sure that they don't ever have to worry about the Solana nonprofit tapping them on the shoulder and telling them what in the world to do. Same with Ethereum and whatnot, right? Well, Ethereum, I think, is just killing itself just through the fees alone. Like, it's in my opinion, that thing's dead, like super dead. Solana is the competitor to like what we're talking about. But if I'm Paulo at Tether, I want to move to a network that I know some Solana foundation can't tell me what to do or control me. So welcome to the Bitcoin Lightning Network, where nobody can tell you what's what, right? Here's where I'm going to argue with myself. Tether's still centralized, right? The amount of treasuries that Tether is holding, like, don't think for a second that the US government can't tap him on the shoulder and say, hey, we don't like the fact that so-and-so is squatting on $100 million or $1 billion worth of Tether tokens. We want you to, remove those tokens from their control. And guess what? If he's the issuer of the USDT token that's backed by US Treasuries, he can kind of control those tokens, even if they're running on the Lightning Network, right? Because he's the issuer. And that's an important point. And think about this. So why is Bitcoin different than Tether? Why is Bitcoin different than Solana? Why is it different than Ethereum? It's different because nobody can take those Bitcoin from you. It's impossible because there's no issuer. The issuer is the protocol itself. So
right.
So
what is really this long run range? What is this? So, right. So knowing, right. Because there's Tether is, we'll say, controversial in certain circles for a number of different reasons as to verity of reserves, et cetera. Trust me, I get asked all the time, and I don't have nearly the depth of answer I should. But knowing that what you just described is the case, that he can get tapped on the shoulder, that he does have the vast majority of Tether reserves in T-bills, which are liquid, backed by the government, et cetera. What is there a longer run move here, and what is it? Because it seems to me that it seems to be a relatively short jump from this world to rolling this out to competing with more existing payment systems.
Oh, yeah.
Securities clearing, big fee businesses done by payment processors, credit card companies, banks. And is that where this is going? And if so, how quickly does that start to be a factor for some of these kinds of industries, do you think?
Well, I would say 100% without a doubt, like, all payment technologies are being disrupted like now. The next thing I would say is the fact that you have a company that probably 1 in 100 people would even know exists, call it Tether, is making more profit than BlackRock alone, tells you how fast this is happening. And should be the wake-up call of wake-up calls to anybody on Wall Street that's not paying attention to this. The fact that you have this company like literally like shellacking any other major bank in profits. I mean, that's the signal. That is the signal that this is where, and you know what, with the SAB 121 repeal, and now that the banks can basically get into the same game of over-collateralized tokenization of US securities is a super lucrative and profitable business. And now that banks can custody Bitcoin and play in this space. Like you basically have the president and his administration saying it's green light here. We want to be the leader in this space. If you're a bank and you're not trying to do what these guys are doing, you're off your rocker. You're spending too much time on the golf course, and you need to wake the hell up.
So to clarify exactly, just for the listeners, what we're talking about here, what you're talking about, that the rollback of SAB 120 or whatever, 121 is a staff accounting bulletin from the SEC under Gensler was repealed. So these banks now can start issuing their own stable coins issued from the bank, collateralized with T-bills, and ultimately collateral, to go in and out of, or help their customers go in and out of Bitcoin. In other words, to be involved in Bitcoin. And not only that, but in the same way that some of these AI companies are having to invest lots of money because if they don't, it's a threat to their business. It would seem to me that these banks are going, not only, it's not a choice, they're going to have to invest to compete with what Tether's doing.
But where I think this race goes is, so Tether is sweeping all their coupons from all these treasuries straight into their corporate balance sheet and buying Bitcoin with it. Okay, that's what they're doing with all their coupons that they're getting. Where I think the competition is going next, if I'm JP Morgan or I'm one of these big banks and I actually understand all of this, what I'm going to do is I'm going to do the exact same thing that Tether's doing, but I'm going to issue with the coupons that I receive. Let's say I receive 5% of the underlying. Let's say I got $100 billion of treasuries backing all the coins I got on the network. So that means I'm going to get $5 billion in coupons annualized for all of that. And why don't I take $3 billion of that and I create and mint new coins and I distribute those coins to all the people that are holding the existing stock of USDT. I basically get interest payments for holding USDT, right? And then I take the other $2 billion that I made, because I made 5, and I take the other $2 billion and I retain that on the corporate balance sheet, and I buy Bitcoin with it, which then makes me even over collateralized on the coins that I'm issuing, because Bitcoin has a CAGR of 25 to 50% annualized, right? Which makes my coin more trusted because I'm over collateralized and I have this treasury. And that's where, but they don't have any competition. So they don't need to pay this dividend or coupon payment or whatever we want to call this yield that's there. But if you're going to compete with them, you have to start competing in a way that you're paying some type of yield for holding Tether, which they can completely do.
And this creates balance sheet capacity from the government. Why would the government want JP Morgan to do this? Is ultimately
they need buyers.
The government needs balance sheet. They need balance sheet to buy treasuries. And they need preferably balance sheet that they can issue, they can financially repress.
They need somebody buying their debt. And Tether is the number one growing buyer of US debt. If you're looking at the second derivative of who is really stepping up to the plate and buying this garbage? Well, it's Tether. They're probably top 10 at this point in the world buying US debt. So the government has to love that. They might not agree or how it's basically expanding the monetary units in the crypto Bitcoin ecosystem, because that's what it's really doing. Is it's the access and how quickly these rails are being tied into Bitcoin are self-reinforcing and just making it that much more powerful. And they probably don't like that, but I guess the new administration loves it.
New administration seems to love it. You've got the balance sheet there. You've got presumably competition in the not too distant future right? Because now if you start getting these establishment banks in, things like Visa and MasterCard, are these types of payment monopolies or oligopolies then at risk of margin compression if JP Morgan can process payments far cheaper over the Lightning Network in some period of time? Is that the right way to think about this kind of a thing?
Far cheaper is such an understatement. You are, by doing this on Lightning, right? You are literally taking the cost of a USD transaction to, it's de minimis. It's effectively zero.
Yeah.
Because it's less than a penny. It's way less than a penny. And the transaction size could be $5,000, right? And it's still less than a penny for the transaction to clear.
So game theory, JP Morgan would want to put some Bitcoin on their balance sheet in the context of what you discussed earlier, because then that will subsidize their ability to undercut the competition and move the volume on payment rails at some point down the road, in theory.
And the wild thing is we're just talking about tokenizing dollars on the Taproot Asset Protocol. Like you could literally tokenize Microsoft stock or Apple stock and have the same clearing mechanism. And so again, you're dematerializing in traditional finance is clearinghouses.
Right? And custodians.
Custody services, like all of it. Now, like think about like how does Robinhood make their money? Well, they take your shares that you own and they lend them out like behind the scenes in a rehypothecation scheme that they collect fees on. And then whenever you like sell it, then they have to get them back. And they're just looking at like, from a statistics standpoint, like how much can we rehypothecate without running into issues, right? That all and all these naive like retail investors, they don't understand that that's happening in the background and that their shares are actually being rehypothecated and money's being made on that. But think about this, like if you are creating tokens of Apple and I'm receiving those on my digital wallet, I actually hold those certificates. Like, and if I want to send you a share of Apple, I can do that instantly without asking somebody for permission for the actual stock certificate. That's kind of a big deal.
It's a potentially huge deal. Wherever, how much has Lightning Network transactions grown over the last 7 years?
During the bear market, it was pretty flat, but now that it's starting to get into a bull market again, it's picking up. So how many Lightning transactions happened in 2024 is the question. And I'm using Perplexity if people want to know which AI I'm using to kind of search this. But we're talking tons. Like, I mean, it's totally nuts how fast some of this. Based on the search result, Lightning 2024 showed significant growth in 2024. In August 2024, it was reported that a record-breaking 92,000 transactions through their infrastructure, averaging 3,000 transactions a day on Lightning. And you got to remember, for the most part, globally, no vendors are even. I would think the number is like way higher. I would imagine you have, because I'm on Nostr, right? And
yep.
So just to kind of give people an idea is like how simple and some of this stuff is. Like I can go to a person's post, like right here on my phone. And for people that are seeing the video, they can see that like I got this person, it's like social media. I can go to this little icon, like this little lightning bolt icon. And when I click that, it's already made the payment. Like I just paid that person 42 Satoshis, which is like 4 cents. It's already cleared. It's already sent. That's one transaction right there for the day on the Lightning Network. These micro transactions are happening all day long. So that's what it's saying here. Hold on.
Let me interrupt you, because in the press release yesterday, of this announcement, they noted that total USDT Tether volume topped $10 trillion on chain, rapidly closing in on Visa's annual volume of 16 trillion. Once fully integrated, users will be able to make cross-border payments with USDT on Lightning that settle instantly and at a fraction of the cost of other networks. So when you frame it out that way, the volume that's on USDT is staggering already.
So this is your point is perfect, because what you're going to get is better reliability on this network of 21,000, decentralized nodes. You're going to get more connectivity. You're going to get like just a more robust reliability of being able to route payments because USDT is coming onto the Lightning Network, which then reinforces the reliability of the Bitcoin network because they now want to play on that. And if you get other stable coins, let's say a company in Europe wants to do a European stable coin on the Lightning Network and have 0 fees for the routing and have instant clearing through the Taproot Asset Protocol running on top of Lightning. Like, I don't know, like when you have an open network, everybody is strengthening it and making it stronger by participating on it and making the reliability better. And the transactions that you just said are mind blowing in size.
Yeah. And then you start getting into things like Fedi, which you can use to set up any size federation, and whether you're a major corporation or family, and use the same network to pay in different currencies with those same types of low cost, instantaneous or near instantaneous settlement. You start to see the network effect really build on itself. So it's well, I promised 11 o'clock hard stop. I'm close. I know you got things to do. I would love to continue this at some point in the future.
Yeah.
Because I think it's super, I mean, it is super important, but I think it's been super important in a niche space. And I think what we're starting to see with these announcements is it's stopping being niche and starting to really compete with or see clear to competing with the existing big chunks of the existing financial system, some of which have been around a long time, have very entrenched positions, and have very rich margins to boot. And so I think it's a really interesting moment of an acceleration in what's already a very disruptive technology.
For sure. Hang on, man. Hang on. It's only getting crazier by the day, man.
Absolutely. Absolutely. Well, thank you very much for your time. I'll let you get jumping. And this to be continued.
Always a pleasure, brother. Yeah, great chatting with you.
You too. You can't raise taxes. You can't raise rates. If you cut spending, you're going to drive the dollar up, and that's going to trigger that same dynamic. You can't cut spending. The only way out is to drive growth. The only way to drive a growth is to weaken the dollar. The dollar is going to be the release valve in 2025, that if we're sitting here in December 2025, the dollar will be lower than where it trades today.